Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Good evening and welcome to Share Shootout. I'm Bruce Whitfield. Tonight in the firing line, our guests Deryck Janse van Rensburg from Nedbank Private Wealth and Sasha Naryshkine from Vestact. Our guests have pre-picked 3 shares. Waving at the camera doesn't win you any favours. Their rival has got absolutely no idea what they hold, but at some point during proceedings they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has 30 seconds and we've got a pressure clock introduced as well. They'll have 30 seconds to argue their stock pick. We then interrogate their choice, humiliate them publicly, and the idea either gets shot down or accepted. The least convincing stock picker is then banished. That's how Share Shootout is won and lost on what is arguably the most vicious stock picking show on TV. The Share Shootout begins with Sasha Naryshkine. You won last week, congratulations. Deryck's a former winner as well, so worthy rivals and adversaries. I look at your stock picks because I have them, Deryck doesn't. Incredibly courageous is what I have to say.
Courageous.
Incredibly
but
courageous.
Bruce, can I interject here for a second?
Of course you may.
Because Deryck and I were chatting whilst we were having our makeup done.
Yes.
And we said the list is getting smaller and smaller of what you're able to choose. So when you say courageous, the list of all the quality is getting smaller and smaller.
Precisely, which makes it that much more challenging and that's much more interesting and that much more useful for people who are watching us, Sasha. Them's the rules. Don't question the rules. We just work here. Your first pick, 30 seconds for Shoprite. Start now.
Shoprite Checkers. Okay, so this is a business that's growing. Their turnover outside of South Africa, 28.2%. But Africa is still a small part of their sales. It's 12.3% of group sales. 100 million people shopped at Shoprite outside of South Africa last year in their non-South African stores. Recently opened stores in the DRC, and they said the DRC is growing at 6%. So imagine if normality returns to the DRC, how much better they can do. They employ 109,000 people in the South African context. Very good.
I'm so grateful that 30 seconds are up. I'm actually going to take the piece of paper away from you. You may not refer to the piece of paper because it ruins your sparkling creativity.
There was one last thing I just wish I could have added there.
Well,
Bruce.
that's why we got the clock, because it stops you from being boring. Right. Okay. Deryck, how much do you hate Shoprite? But Shoprite, fabulous business, 100 billion rand retail company. It's grown something like 7,000% over the last 10 years if in terms of the total return. It has been nothing short of spectacular. It makes Pick and Pay look like a bunch of amateurs on a street corner relative to what Shoprite has achieved. It's on a multiple of 28 times. Are you prepared to pay 28 times last year's profits for this encroachment into Africa?
Look, at a 28 multiple, I'm a little bit reluctant to go chase that. And I did look at the retail sector, I looked at the retail space, but for me personally, Shoprite's not a standout. I think if you got the shares, you can maybe hold them, but for new money coming into the market, I think it's just too expensive. And you know, if you look at some of the political risks also that Africa could pose in the future, you know, it's got some downside risk to it.
All right, but we had a reality check for Shoprite at the last results. They grew about 12%. There wasn't spectacular growth coming through. We saw that coming through. The share price had been as high as, I think, 220 bucks or thereabouts.
No, not quite.
Okay, about 215.
Around 200.
Okay, well, it's certainly been higher than 200. Okay, we'll agree with that. You don't have your notes, so how can I trust you? But over 200 rand a share, that big pullback happened. Yes. A nice opportunity perhaps at 170 bucks to buy some Shoprites or not.
Like I said, I think the multiple's just too much relative to some of the other retailers out there, and I think there's probably some better opportunities.
All right, we'll talk about those better opportunities in a second. What was the other thing you wanted to say in your quite pathetic defense?
I was so expecting the multiple is too high, because essentially it doesn't matter what you and I or Deryck are willing to pay for these companies. It matters what somebody who's sitting in London or Chicago or Charlotte in North Carolina are willing to pay for these companies. And if you have a look at the shareholding structure, and I think I mentioned this to you somewhere before, outside of the Government Employees Pension Fund, outside of Christo Visa, and outside of Whitey Basson, they are all international shareholders with a longer term view than what's going to happen next year or in 18 months or in 24 months' time. They're taking a long term structural view.
Don't need to get aggressive. At what point, at what point though, do they wise up to the fact that the massive profit growth that we've enjoyed for the last 10 years is not going to be repeated in the next 10?
That's what you're saying.
That's what I'm saying.
That's what you're saying.
That's what I said.
Yeah, but I don't think that that's, you know, Africa is still at a very low base. And I think that their African expansion story is what people are paying for. People are willing to pay 31 times for Mexico, Walmart's earnings. So I wouldn't get too worried that on a couple of years.
Let's draw a line under it before he gets even more hostile. Why is he so violent? Okay, you can see how aggressive he is. Tread carefully on this one. You're shooting it down based on the fact that you don't care that foreign investors are prepared to pay this massive multiple.
Well, I've also chosen a stock from the retail space. So, I could have chosen Shoprite, and at this stage, I just think it's too expensive.
Okay.
There's just too much downside.
Right.
risk.
Your first pick then, Deryck, is in that retail space, but it's at a considerably more attractive multiple.
Yes.
It's in the fashion space, and your 30 seconds on Foschini start now.
Well, basically, if you look at Foschini and the fundamentals of it, the earnings, we've had some earnings downgrades, but earnings are still very good. So if you look at it on a forward basis, you've got some fully headline earnings per share pointing to around 17% looking forward. And if you look at it on a yield basis, the yield of Foschini is also quite attractive. You've seen that pullback in the retail space. Under 110 Rand, I think it's a great opportunity. And that's it. I think that there's some good room for growth.
Okay, good. Nice within 30 seconds. Thank you for getting all your thoughts into that brief period. A yield of 4%, a multiple of 13 times. I have worries about this one. Do you like it?
I do.
Okay.
This is the one I'm going to pick out of his three without knowing the other two.
Okay, awesome. So you're
on the same sort of basis. I mean, the only thing that detracts me a little bit is too many brands, I think, competing with each other. That's probably the only thing.
Because what they've done in the last couple of years, of course, and Truworths also has done this, has gone off and bought lots of little sub-brands. And so these massive clothing retailers own things like Young Designers Emporium, and they own, you shop at the funky places.
I never shop at the funky places.
Oh, okay. But Foschini you will take. I worry, though, about the credit position, South Africa's credit position. I'm worried about unsecured credit. I'm worried about the fact that a lot of these retailers are accepting 3 out of 10 people who walk through their front doors and ask for credit. And those 3 people themselves are already quite stretched in terms of their ability to borrow. Doesn't that concern you?
Yeah, look, I think it is always going to be a concern. And if you just look at the unsecured lending space in South Africa, there's potentially some big bubbles that are forming that one argues at this point. But also look at the target market that Foschini attracts. Those are sort of your high-end earners that are shopping there. Yes, there is some credit extension that's taking place within the stable, but in my opinion, as you start to see some economic recovery and some GDP uptick as we move towards the end of the year, they're going to have the ability and the earning power to service that credit going forward.
Okay, but you're making a big assumption that we're going to get that GDP uptick and that we're going to get that opportunity to borrow. One thing that Prime Gordon made very clear in his budget speech last week when he was talking about unsecured credit is he's deeply concerned about it and wants to continue engaging with the financial sector about it. Also concerned about the growth rate, which is around 2.5%, and that's an optimistic view based on a stodgy global environment right now, Sasha.
Yeah, but I mean, his assumptions are still for growth. The way that people speak in the media and the headlines you read, you would swear that Spanish economic growth was down 20% and not 1.8% year on year. People always plan for the worst, but are generally surprised when the outlook is slightly worse than what actually is reality.
Why would you buy shares of a company you don't support?
How do you mean?
You don't shop at Foschini, clearly.
Yes, but my wife does.
Okay, and she's
much more fashionable than me.
Immaculately turned out. That's where the household budget gets spent.
100%.
Okay.
No, come on, Bruce, not the entire household budget. School fees.
Oh yeah, and school fees.
And Eskom.
And healthcare.
And healthcare.
Okay, and security.
And security.
Okay, but otherwise there's not much left for the retail sector, is there, Sasha?
Well, food, of course. And food.
Okay, right, there we go. So you will take Foschini.
I will take it.
Being a fashionable guy, you're hedging your bets on that particular front because your second pick shows that you do not live in sectional title and that you are not subject to the whims of LSAT rentals when it comes to management of your DSTV signal.
You've given it away now, Bruce.
30 seconds on Ellies. Start now.
Ellies, okay, interesting business. What I quite like about it is the power generation side. So I think in a South African context where we're about to hear about Eskom's increases, a lot of people are going to get a lot more savvy about their electricity usage, and that goes everything from what plugs you're using to what lights you're using, also leveraging off that magnificent run that DSTV has had. It's a very well and tightly held business, and it also trades on a forward multiple of less than 11 times.
Okay, that was better managed in
Thanks,
terms of
Bruce.
your time control. The clock makes it difficult, doesn't it?
Very difficult.
But I quite like the clock. The clock is nice and distracting. Ellies, do you like it?
I'm going to have to admit that I do like it.
Okay.
And I think that again, going back to fundamentals and valuations around this business, I think that although it's done a lot in terms of the price movement over the recent 12 months.
Where did it list? It listed at about £2.
Yeah, it was about £2.
No, it was probably less than that.
Okay, but anyway, it's sitting about £8.50. You've made 4 times your money in the last 5 years in probably one of the world's most uncomfortable economic environments. You've made a 400 or 500% return. Thank you very much, courtesy of Ellies.
Yeah, and hats off to management. I mean, they obviously spotted a niche and actually, capitalized off it. But looking forward, and yes, you look at the price action and where it sits at the moment, but looking forward, the price is justified, and I think you could get some consistent growth in it, and obviously with the Eskom tariffs coming into play, that could be a benefit.
Explain to me, though, how Ellies provides alternative sources of backup, for example. So when there's a blackout, it's terribly useful to have a generator from Ellies. But what is the alternative energy source that Ellies is providing in terms of an Eskom alternative?
Well, remember that first and foremost, of course, like you pointed out, they bought a business called Megatron.
Yeah.
So these are diesel generators, which, household and small business utilization, it's going to be more and more of that. That's provided, of course, that Eskom doesn't manage to meet our needs.
Yes.
So that's the assumption. But I think more importantly, it's price more than anything else. So if you have a look at your light bulbs, the next time you're in a, let's say, builder's warehouse, there's an entire section now devoted to much lower wattage light bulbs, which reduce your electricity bill. So that's the important part about consumers start to act, and they're reactionary when it starts to hurt
and
their pocket.
These guys are supplying this material, of course, into builders' warehouse.
100%. Some of it is manufactured here locally.
Okay, so you're not shooting it down, you're accepting it with open arms, and I think you're going to be grateful that you did, based on the final pick of this morning. They're very courageous. The most courageous pick so far of all. Look, we've got to create some drama somehow. We've got the clock, and we need some additional drama. Here's an interesting one, Deryck, Janse van Rensburg, because here is a company which is a holding company. It is trading on a multiple of just 13 times, a share price of 40 Rand. What is his pick?
Share price of 40 Rand, a holding company. Cheapest up. No, stumped.
Okay. Oh, good. So you're ahead so far. RMB Holdings, 30 seconds start now.
Okay, so just looking at the banking sector of late, we've had some good performance. We've seen some trading statements coming out of all the banks and some good earnings coming out. After the recent pullback, I think that the earnings do justify an investment there. And I think if you just look at the banking sector as a whole, they deliver consistency. And to give you a nice sort of backbone to a portfolio, I think that the banks, and particularly RMBH, is obviously offering some opportunity at these levels. And it's a fundamental valuation, and I still think that they're going to deliver some good earnings going forward.
What is in RMBH? It's the stake in First Rand, it's Westbank, it's Outsurance as well. What else is in RMBH?
The asset management part, of
the
course.
asset management part in there as well.
Investment banking.
Do you like it?
No.
Excellent.
The reason why I dislike banks as a whole, and you must also put 30 seconds on the comeback as well, Bruce, otherwise it gets long-winded. But as a whole...
Only when you're speaking.
Only when I'm as a whole, I think investment banking has probably seen its best years. And the reason why I say that is you might cast your mind back to what Jamie Dimon said a few days ago, where he said in a couple of years' time, banks are going to have too much capital.
Yeah.
So I think from what the expectations of the shareholders were set back in the go-go days, you're not going to be able to achieve that in the future. And I think a lot of these are aggressively priced for return on equity that returns to those big numbers.
He's got to be positive about banks because he works for one. But here's the situation. If you look over the last 10 years, would you concur that it's been probably the sweetest spot for banks the last 10 years in their history, especially the first, say, 6 of those 10 years?
Absolutely, I do think so. But I mean, you must remember, Bruce, we came out of a financial crisis. You know, the low bases that we came off with were huge.
Total return.
Yes.
For the best performing bank on the JSE, which is First Rand, over the last 10 years is about 740%.
Sure.
Okay, so you've done okay.
Done well.
But that's the best. Look, on Pinnacle Technology you made 25,000%, so let's be realistic about this. So 740% return over the 10 years. I think Standard Bank was the next best at about 400%. Nedbank is the worst at about 160%. So if you'd invested 10,000 into Nedbank 10 years ago, you've now got 26,000 rands worth of capital. That's not a return over a 10-year period. Now banks are going into a tougher economic environment. Why put money into them now?
I still think that the sweet spot is there, Bruce. And if you just look, and we can argue about the investment banking side of it, but I still think that it's also going to be a proxy to the overall sort of global environment. And as you start to see some economic activity pick up of where we are at the moment, banks benefit off this. And it's only when really bubbles are created that pop and you start to see earnings come back quite considerably. The key here is consistency.
Okay, so nice, safe, conservative
Correct.
bet, RMB Holdings, but you shoot it down.
Well, I have to because I liked his first one.
Okay, you don't have to shoot this one down. You can accept to, but that means you've gone down to the game.
Exactly.
Okay, so from a survival point of view, but from a logic point of view, would you add it into a more conservative portfolio right now at $40?
Inside of our private client portfolios, we steer away completely from the big banks.
You're shot down on that particular front. So time for us to shoot off for an ad break, but before we do that, just have a quick look. Sasha Naryshkine has identified Shoprite and Ellies so far in his portfolio of stock picks. And we've also got from Deryck, Janse from Rensburg from Nedbank Private Wealth and the Foschini and RMB Holdings. We'll be talking about those in a little bit more detail in just a moment. Each one has had one shot down. Each one has got one final pick before the end of the show. And at that point, I am ready to shoot one of them down and eliminate them from the game. Who will it be? Stay tuned after this.